What happens when the people responsible for finding the best talent in the world start leaving one by one? Not traders, not portfolio managers, but the architects of the talent pipeline itself, behind the glass towers, beyond the performance charts and headlines about billions under management. Something far more revealing has been unfolding quietly, a sequence of exits at the very core of the recruiting machine. And in an industry where people are the strategy, that kind of movement is never random. This isn't about drama. It's about pressure. It's about standards. And it's about what happens inside an institution where expectations never stop rising. Stay with me, because what you're about to hear isn't speculation and it isn't rumor. It's a real unfolding story about power, precision, and the unseen battle for human capital at the highest level of global finance. In this business, people often assume that capital is the hardest thing to assemble. It isn't. Capital follows conviction. What truly determines whether an institution wins or fades is its ability to identify, attract, and retain exceptional people, especially those tasked with finding the next generation of talent. That's why the recent wave of senior recruiting and business development departures deserves careful attention. Not gossip, not speculation, but sober analysis. When you see multiple leaders responsible for talent acquisition step away within a compressed period of time, it tells you something important about the environment they were operating in. Recruiting at the highest level of global finance is no longer a support function, it is a frontline role with enormous pressure. These executives are expected to deliver world-class results immediately, not in theory, not over years, but quarter by quarter. In a market where the supply of elite performers is finite and competition is relentless, the expectations placed on recruiting leadership today are extraordinary. They are asked to source individuals who can generate differentiated returns in increasingly efficient markets, to convince them to leave comfortable positions, and to integrate them into an organization with uncompromising standards. That is not a slow process, and it is not a forgiving one. When performance is measured this precisely and timelines are this aggressive, turnover becomes a natural byproduct of ambition. What makes this moment notable is not a single exit, but the pattern. Multiple senior figures across business development and recruiting functions have moved on, some after relatively short tenures. That kind of movement doesn't suggest a lack of opportunity. It suggests intensity. It suggests an environment where the bar is not merely high, but constantly rising. In such settings, alignment matters as much as skill. When alignment breaks, even highly capable executives choose to step away. It's also important to recognize the broader context. The hedge fund industry is in the middle of a global talent arms race. Recruiters themselves are now strategic assets, pursued by competitors with the same vigor once reserved for portfolio managers. When the people who control access to talent become talent themselves, mobility accelerates. Offers multiply, loyalty is tested, and movement becomes more visible. But turnover should never be confused with instability. In elite organizations, change is often the mechanism through which standards are preserved. When roles evolve faster than individuals can adapt, or when individuals outgrow the structure around them, separation is not failure, it is recalibration. Strong institutions continue to recruit, continue to invest, and continue to refine their approach precisely because they refuse to lower expectations. The real takeaway here is not about who left, but what remains constant. The mission doesn't change. The pursuit of excellence doesn't slow down. Recruiting leadership will be rebuilt, retooled, and reinforced, just as it always has been. Because in the end, institutions that operate at the top of global finance are not defined by moments of transition. They are defined by how they respond to them. And in this industry, the response is always the same: raise the bar, move faster, and keep going. The competition for talent in global finance has reached a point where traditional rules no longer apply. This is no longer a market where firms quietly post roles and wait for resumes to arrive. It is a continuous high-stakes contest where the most capable people are identified early, pursued aggressively, and retained only through clarity of purpose and uncompromising standards. In that environment, recruiting leaders sit at the very center of the battlefield, and the pressure on them is immense. When recruiting executives depart, the instinct is to look inward and ask what went wrong. That question is too small. The more important question is what changed. Markets have compressed. Information has become ubiquitous. Alpha is harder to find, and when it appears, it is fleeting. As a result, the demand for individuals who can consistently outperform has exploded while the supply remains extremely limited. Recruiting leadership is expected to solve that imbalance in real time. Today's recruiting executives are not simply hiring managers. They are strategists, they are negotiators, they are brand ambassadors. They are expected to understand complex trading strategies, evaluate cultural fit under intense time pressure, and close candidates who may already have multiple elite options on the table. Every hire is scrutinized, every miss is remembered, and every decision carries consequences that extend far beyond a single team. In such a landscape, turnover is not surprising. It is inevitable. Some leaders thrive in environments where the mission is clearly defined, but the execution is unforgiving. Others discover that the pace, the scrutiny, or the constant escalation of expectations no longer aligns with how they want to operate. When that realization happens, departure is not drama, it is clarity. There is also a structural shift underway. Recruiting executives themselves have become scarce assets. Firms are no longer competing only for traders and technologists. They are competing for the people who know how to find them. That dynamic creates a level of mobility that didn't exist a decade ago. When demand rises and barriers to movement fall, exits accelerate. This is not unique to any one firm. It is a defining feature of the modern hedge fund ecosystem. What matters most is how institutions respond. Elite organizations do not dilute standards to reduce friction. They do not slow down to create comfort. They refine processes, reinforce culture, and continue to invest in leadership that can operate at scale. They understand that recruiting excellence is not achieved through stability alone, but through constant recalibration. The presence of turnover does not mean the system is broken. Often it means the system is working exactly as designed, filtering for alignment, resilience, and performance under pressure. Over time, the individuals who remain are those who can operate without ambiguity, who understand that expectations will never stop rising, and who are motivated by that reality rather than intimidated by it. In the end, organizations at the top of global finance are not built to be easy places to work. They are built to be effective. Talent is the currency, recruiting is the engine, and pressure is the price of admission. Those who stay accept that bargain willingly. Those who leave simply choose a different one. There is a misconception that when senior executives leave, it signals disorder. In reality, at the highest levels of performance-driven organizations, movement often signals the opposite, precision. When standards are absolute and outcomes are measurable, every role is continuously tested against the demands of the mission. Recruiting leadership is no exception, and arguably it is tested more than most. Recruiting at the elite end of finance is not about filling seats. It is about shaping the future of the institution. Every hire represents a bet on judgment, on character, on the ability to perform under sustained pressure. Recruiting executives are expected to make those bets repeatedly with limited margin for error while the market around them evolves faster than ever. When expectations shift even slightly, the role itself changes. What we are witnessing is not a collapse of recruiting leadership, but a recalibration of what that leadership must deliver. The profile of the ideal recruiter has expanded. It now demands deep market intelligence, an instinct for culture, the ability to assess performance signals before they appear on a resume, and the credibility to engage with candidates who already see themselves as winners. Not everyone who succeeded in the previous era will find the same footing in the current one. Short tenures, in particular, attract attention. But short tenure does not always indicate failure. Sometimes it reflects speed in recognizing misalignment, speed in decision-making, and speed in acting before momentum is lost. In environments where the cost of hesitation is high, decisive exits can be healthier than prolonged uncertainty. That is not instability, it is discipline. There is also an external force at play. The demand for recruiting executives who understand complex, multi-strategy platforms has never been higher. These individuals are being actively targeted by competitors who see recruiting excellence as a strategic advantage, not a support function. When opportunities multiply, movement follows. That reality does not diminish the institution they leave. It confirms the value of the experience gained there. What separates enduring organizations from average ones is how they absorb change. Strong firms do not personalize departures. They do not anchor their identity to any single individual or team. They focus on systems, culture, and principles that persist beyond personnel shifts. When recruiting leadership changes, the objective remains constant: attract exceptional people who raise the collective standard. This is where perspective matters. In a high-performance environment, continuity is not defined by faces. It is defined by values. The commitment to excellence, the intolerance for complacency, and the insistence on measurable impact do not leave when an executive does. They are embedded in the structure. Recruiting leaders are stewards of those values, not owners of them. Over time, the market will interpret these movements in simple terms. Some will see churn, others will see competition. The truth is more nuanced. This is what adaptation looks like when the stakes are high and the pace is unforgiving. Roles evolve, expectations sharpen, and only those aligned with that trajectory remain. In the long run, organizations that continue to attract top-tier talent are not the ones that avoid change. They are the ones that manage it decisively. Recruiting leadership will continue to evolve because the mission demands it. And in this business, the mission always comes first. At the top end of global finance, culture is not defined by slogans or policies. It is defined by consequences. Expectations are explicit, performance is visible, and accountability is non-negotiable. Recruiting leadership operates squarely within that reality. Their success is not measured by activity, but by outcomes: who they bring in, how those people perform, and whether they elevate the organization as a whole. When those outcomes are scrutinized relentlessly, leadership roles naturally evolve. What many underestimate is how much the recruiting function has changed in recent years. It is no longer sufficient to identify talent that looks strong on paper. Markets have become too efficient, strategies too sophisticated, and margins too thin. Recruiting leaders are now expected to anticipate where performance will come from next, not where it came from last. That requires judgment, conviction, and the willingness to make decisions that will be questioned in the moment, but validated over time. As that bar rises, the margin for misalignment shrinks. Some executives discover that the role they stepped into is materially different from the one they imagined. Others realize that the pace of decision-making, the intensity of feedback, or the scale of responsibility demands a different personal trade-off than they are prepared to make. When that realization occurs, departure is not a disruption, it is an honest outcome. It's also critical to understand that recruiting leadership does not operate in isolation. They sit at the intersection of strategy, culture, and growth. Every hiring decision sends a signal internally and externally about what the institution values. That level of influence comes with pressure, and pressure accelerates truth. It reveals whether individuals are aligned with the mission or merely attracted to the prestige of the platform. Turnover, viewed through this lens, becomes less alarming and more instructive. It highlights how seriously standards are enforced and how unwilling the organization is to compromise them. Stability achieved by lowering expectations is fragile. Stability earned through discipline is durable. The difference between the two defines whether an institution remains elite or gradually becomes average. There is also a strategic advantage in constant refinement. When leadership roles are periodically refreshed, organizations avoid stagnation. New perspectives challenge existing assumptions. Processes are questioned, improved, and rebuilt. Recruiting, in particular, benefits from this dynamism because the talent market itself never stands still. What worked 3 years ago may be obsolete today. Critically, continuity does not come from individuals. It comes from principles. When values are clear and deeply embedded, leadership transitions do not derail progress. They reinforce it. New leaders step into a framework that already defines success, already measures performance, and already demands excellence. Their task is not to reinvent the mission, but to execute it at an even higher level. In the end, the narrative is simple, even if the headlines are not. High-performance organizations evolve constantly because they refuse to accept complacency. Recruiting leadership is held to the same standard as every other function: deliver results or make room for. Someone who can. That is not instability, that is discipline. And discipline, sustained over time, is what separates institutions that merely grow from those that endure. The defining characteristic of elite institutions is not that they avoid friction, but that they harness it. Progress at scale is never smooth. It is shaped by tension between ambition and execution, between speed and precision, between opportunity and discipline. Recruiting leadership lives inside that tension every day. Their mandate is clear: secure exceptional talent in a market where exceptional talent has endless options. As organizations grow larger and more complex, recruiting stops being transactional and becomes existential. The quality of people entering the system determines the quality of decisions made years down the line. That reality places recruiting executives under a microscope. They are judged not on effort, but on impact, not on intent, but on outcomes that compound over time. When departures occur within that function, the temptation is to frame them emotionally, to search for narratives of dissatisfaction or dysfunction. That framing misses the point. In environments where performance is measurable and expectations are uncompromising, roles are constantly being stress tested. Some leaders thrive under that pressure and sharpen with it. Others recognize that their comparative advantage lies elsewhere. Neither outcome is a failure. It is a sorting mechanism. There is also a broader evolution underway in how institutions think about leadership. Longevity alone is no longer a proxy for success. Effectiveness is. If a structure, a process, or a leadership approach is not producing the desired result quickly enough, it is reevaluated. That willingness to reassess, even when it is uncomfortable, is a strength, not a weakness. Recruiting executives today are expected to operate with incomplete information, make high conviction decisions, and stand behind them in real time. They are asked to predict not only who can perform, but who can adapt as markets change, strategies shift, and competition intensifies. That is an extraordinarily difficult task. When alignment between individual judgment and institutional direction falters, separation becomes the rational choice. What often goes unspoken is that these environments are designed to surface truth quickly. Feedback is direct, metrics are transparent, ambiguity is minimized. In such systems, prolonged misalignment rarely survives. Decisions, including the decision to move on, are made decisively because the cost of delay is higher than the cost of change. Over time, this approach produces resilience. Institutions that accept short-term noise in exchange for long-term clarity emerge stronger. They refine their leadership models, sharpen their recruiting philosophy, and reinforce the cultural standards that attracted top talent in the first place. Continuity is preserved not by freezing roles in place, but by ensuring that every role is filled by someone fully aligned with the mission. The larger lesson is straightforward. At the highest level, success is not about comfort or consensus. It is about coherence. When people, processes, and expectations are aligned, performance follows. When they are not, change is inevitable. In this business, that is not a flaw in the system. It is the system working as intended. So the real question isn't who left, it's what this movement reveals. In an industry where every decision is measured, every role is stress tested, and every standard is non-negotiable, change doesn't happen quietly by accident. It happens because pressure exposes truth. And when the truth surfaces, institutions either evolve or they fall behind. This story isn't finished. The talent war is intensifying. Expectations are still rising, and the firms that will dominate the next decade won't be the ones that avoided disruption. They'll be the ones that mastered it. Because in the end, money doesn't build great institutions, people do. And when the people who choose the people start moving, that's when you know something bigger is underway.